Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Friday morning and the cues are looking fairly mixed. All is well when it comes to the global markets, given the fact that Wall Street has clocked a second straight session of record close. But GIFT Nifty also hinting at a good start. But, it's the IT stocks that will be in focus after Accenture's guidance cut. That may spoil the mood on the Wall Street because yesterday we saw a very good comeback by the Indian market where we reclaimed that crucial 22,000 mark. Now the crucial thing to note will be whether or not we manage to hold on to those 22,000 levels. Only then we can see a rally towards 22,400 or thereabouts. That's what experts say, but we will be touching base with experts and understanding what they really think of yesterday's up move and where we are headed from here. But lots lined up. We will be taking stock of a lot of stocks in news. We'll be taking stock of all your stock-related queries. So if you have them, keep them coming in on our YouTube feed. We'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street rally continues as the key indices clock second straight day of record close. US dollar and treasury yields too inch up higher. In fact, in Europe, FTSE sees its best day since September after the Bank of England keeps rates unchanged and the Swiss National Bank surprises with a quarter-point rate cut. Meanwhile, Asia is mixed. GIFT Nifty hinting at a mildly positive start for the Indian market. In a negative read-through for Indian IT companies, global giant Accenture reports, cuts its FY24 revenue guidance to 1 to 3% from 2 to 5% earlier, citing tough macros and reduced client spending. Infosys and Wipro ADRs see declines of as much as 4% overnight. ED arrests Delhi Chief Minister Arvind Kejriwal in the Delhi liquor policy case. Arrest comes after Kejriwal failed to appear for questioning despite receiving multiple summons. AAP announces nationwide protest while Supreme Court will hear Delhi CM's plea challenging HC order in the excise policy case. Before we get our guest on board, let's take a look at the cues for trade this morning. Yesterday, of course, the Nifty ended above that 22,000 mark. It was up somewhere around 175 points or thereabouts. There was a considerable cool off in the India VIX index. That shut shop around the 12.5 level. Further cool down of 7%. Mid and small cap indices, the comeback was far more pronounced there with the 2.5% gains coming in on each of the two indices, mid caps and small cap. Looking at the FNOQs, the Nifty open interest was down 2.2%, shedding 2.6 lakh shares. The Nifty March futures was trading at a premium of 90.5 vis-a-vis 70.95. The Nifty Bank, open interest was down at 1.2%, shedding over 22,500 shares, and the put call ratio is now at 1.2, significantly higher than 0.79. In FNO ban, SAIL re-enters FNO ban, and Balrampur Chini, Piramal Enterprises, Z Entertainment, Biocon, Industar, Tata Chemicals, these are all still in the FNO ban, and 2 or 3 counters are out of FNO ban. They are Hindustan Copper and RBL Bank. FIIs net sold, to the tune of 1,800 crore rupees in the cash market, wherein DIIs bought shares worth 3,200 crores in the cash market. But, lots of stocks will be in focus. We'll be taking that up with our technical expert. But joining me is Raja Venkatraman, who is the founder of NeoTrader, joining in. Great to have you on the show, Raja. 22,000, back on the index. Do you think we can sustain those levels, or do you think the weakness in IT pack will drag the index below this crucial level today?
Yeah, when you take a look at the sentiment is still staging a revival. So in that scenario, whatever triggers which we are receiving from overseas continues to remain mixed. Yes, we had some brief upside trigger by the Fed, and that helped us to stage a gap up opening yesterday. And we continue to rally. But then what we really need to understand is that the kind of option positions that got built in and the kind of oversold positions Nifty had reached in, this revival was definitely on the cards. But then the kind of rise which has happened, it is only a momentary one. And I would continue to tread the markets with caution, because at the current juncture, we are at an important zone, which is around 22,000. Yes, we struggled a lot before crossing this level, and we have dipped below that. So which is a very significant aspect to consider. Now, looking at the OI position, what I'm finding is that there is a steady put writing happening at around the 22,000 mark and 22,100 mark. So now these two levels have to be closed. We should have a closing about 22,100 for us to scale towards 22,400. This is what is my expectation from Nifty. Looking at the way the market is poised at the open, it clearly suggests that there could be some bit of sell off here, cool off here, but then overall one need not panic and look to again go short. I would not advise to go short now because on the higher time frames Nifty has reached some considerable supports at around the 21,800 region. So shorting would not be a good idea. Looking to buy on dips would be a good better one. Now after a long time, Bank Nifty has managed to hold on, and we would look for Bank Nifty to stage a move above 47,500 for us to really, for the bulls really to come back into the game. Now the baton is with Bank Nifty to take the movement ahead. And looking at the kind of truncated week which is coming up and a long weekend which is coming up, I don't think that much shorts will be there in the system. So if you want to really trade and manage to recover some of your losses with the recent fall, one could look to enter into some BTST kind of an approach towards the later half of the day, where I expect some bit of bullishness to appear. This is my take on the entire index at the moment.
Right. Let me also bring on board, Deepak Ramaraju, who's the senior fund manager at Shriram AMC, joining in. Great to have you on the show, Deepak. I want to first ask you your thoughts on where the markets are headed. We've hit record highs. We came off quite a bit. We've seen what happened with the mid and small cap indices. But as we step into the general elections, would you, predict another dash at record levels, or do you think we are in consolidation mode, despite the fact that we saw a good, comeback yesterday?
So first of all, thank you for having me on the show. And yes, as you said, there's some amount of consolidation happening in the markets right now, especially after the mid caps and small cap, which had seen a kind of stupendous rally. There's some amount of profit taking happening. So technically, we are still in a bull market because it's kind of profit taking happening in a bull market because the real interest rates are on the positive side. That means to say you are going to see the bull markets rising from here on, and then the bulls are yet to play out actually. So as the interest rate cut comes in, that's when the real bull market will really start. So in my view, we are in still part of the bull market journey. So this is a consolidation in the as we go ahead in this phase. And since we are heading towards the election, there's some amount of profit taking happening from the streets, basically.
Right. What about the IT pack? Of course, Accenture has cut its guidance, revenue guidance, citing tough macros. They've said that, there has been a reduction in client spends. If you recall in Q3, the management commentary from Indian IT majors, hinted that, things have bottomed out on the revenue front. But the latest commentary from Accenture is pointing to more pain, even though the Fed has hinted that there will be 3 rate cuts this year. Looks like there has been no improvement, or there are less expectations of any kind of improvement in client spends. In that light, how do you view the Indian IT pack now? Would you be a buyer in Indian IT and wait for the recovery to kick in, or would you say that wait for some more time before exposing yourself to IT names?
So it is like kind of the economic situation has to improve there for the IT spending to come back in a full stream. So till such time, we are not seeing kind of uptick in kind of the spending coming in on the IT side. So that's the reason we are seeing some kind of pressure on the IT stocks. And obviously, as Accenture has said, it's clearly visible there that the IT spending is still not yet bottomed out yet. So kind of we are still see the bottoming out of the IT spending, and people are being cautious before they go ahead and spend on the IT budgets. So it's we are not very far up from the bottom. So in my view, as the interest rate cut come in, the economic signals will kind of trend towards the positive side. That will actually imply that the IT spending will also come back. So if you look at FTSE yesterday, the IT index was up 3.1%. Kind of the markets will try to become more optimistic on the rate cuts, and then this will actually kind of tend to go towards even before the actual event actually happens. The markets will react much ahead of that. So I don't see kind of the IT stocks will start reacting positively when we are going closer to the rate cuts, and that's going to be the order way the world works basically.
Right, hold that thought. I'll come back to you, Deepak. But Raja, very quickly, what are your trades or recommendations for today, and what will be an good FNO strategy for today's session?
Yeah, so I would adopt if I were to trade the indices, I would looking at both between both the indices. Yes, I would wait for some more trends to emerge in Bank Nifty, but Nifty would be a better buy. Any dips towards 22,000 to 21,975 region would be a good area to buy into the Nifty for the upside towards 22,100, 22,150. That is as far as the indices are concerned. Now, amongst the stocks, I would like to go in with a buy in Zydus Life around the current levels with a stop at 980 for a target towards 1010 and 1020. And again, I would like to go with the another stock in ABB. It has been managing to do well and it has been sustaining the current decline. And from the kind of trends that are seen in ABB, it's clearly evidence that there are a lot of bullish prospects with also FIS participating in this. So buy it at current levels with a stop at 5820 for a target towards 5983. So these are the two trade recommendations from my side.
Right, just about couple of minutes to go for market open, but on the charts, Raja, I want to get in your thoughts on technology heavyweights like TCS and Infosys, and of course also Coforge, given the fact that they have given some color as to what they plan to do with the fundraise of 3,200 crore rupees. So these three stocks, how are they stacked up on the charts?
Yeah, looking at the pace of decline in all the IT names in the last few sessions, these stocks had definitely reached some oversold levels from where we can expect some short covering rebound. And but if you take a look at the overall picture and the guidance given by Accenture, it clearly says that the IT sector as a whole is going to take some time for revival. So one needs to be very cautious. IT was definitely a favorite 3 years ago, but we can't hold on to those thoughts and continue to participate in the market. What we need to see is what is the current flavor, and the current flavor is the PSE sector, the defense, the PSU banks, the railway stocks. These are the ones which are actually performing, and even pharma has done reasonably
Right.
well. So select pharma names have been doing pretty well. So it is better that we look at those sectors rather than hanging on to the IT names because we are having some overhang of its previous performance. So
Raja.
just like disclaimer, past performance does not indicate what's going to happen in the future. So that's the way the IT scenario is right
IT
now.
stocks, of course, markets have opened and we've opened below that 22,000 mark, just about 0.2% lower right now. But the Nifty IT pack, IT index is down somewhere around 2.5%, reacting to the guidance cut, as we spoke about it, nearly 3% kind of a cut coming in there. So, in that sense, let's pull up some of the IT names and see which are the ones that are witnessing the brunt of the sell-off. HCL Tech is the first one. Top Nifty loser, nearly 4% cut coming in there. Infosys, Wipro, TCS, Tech Mahindra. So top 5 losers on the Nifty 50 are from the IT pack, which was expected given the fact that overnight we saw the Wipro and Infosys ADR slump over 4%. And even the mid-cap IT names, let's pull up Coforge and see how that's reacting. Of course, the management has given some color as to how they plan to utilize the funds that are being raised, but Coforge down 2.5%. KPIT Tech should be the next one, that should come up on your screens. And of course, it's down 2%. So the cut across the large cap IT universe has been, more pronounced. If you look at the mid-cap IT names. Aside of that, let's take a look at some of the other movers and shakers in the market. Let's pull up the auto pack and see how that's faring in today's session. Banks fairly flat, but in the positive zone. So is the case with autos. Flat with a positive bias. Aside of that, let's take a look at the gainers on the index then. Sun Pharma, Titan, UPL, Cipla, Bharti Airtel, ITC. These are some of the other names. But let's go back to our guests who are waiting by. Deepak, coming to you. For the Indian market per se, as we head into elections, the Fed uncertainty is out of the way for now, right? So what is the next big trigger for the Indian market, excluding of course, the general elections that are around the corner? Do you think China's, some bit of recovery there could be the big risk for Indian equities going forward?
Not really. The reason is Chinese equity, obviously the rate cuts are going to play out.
Right, I think there's some issue with the uh, you- Deepak, if you can hear me, you can go ahead.
Yeah. So I don't see kind of impact from the China side coming into the Indian equities because China is definitely doing the rate cuts to improve the economic situation where they're currently in. So, but I don't see kind of any risk coming into us because the FI flows are not going to go there significantly into China because having said the economy is still under major pressure in China, I don't see the FI flows going into China to a large extent. So India is a better place from an economic perspective, and the growth is more visible here. Yes, the valuation is might be stretched in India compared to China from a relative perspective, but I don't see the case where significant flows are going to go into China compared to India. So from a trigger point of view. So now the other major trigger for us is after the election is going to be the rate cuts here and the monsoon picking up because the El Nino is almost at the end of the cycle. So that means to say the normal monsoon should kick in the middle of around July, August. So that will be another major trigger that will actually help in inflation coming down a bit. So that should actually trigger in kind of the sentiments around the rate cuts will be more positive. So in my view, the second half will be more positive side for the equity markets as a whole. The second half of this entire calendar will be positive for the equity markets because we are going to be heading towards the rate cut. That will be putting a positive sentiments on the markets as
All right, I want to get in your thoughts on the PSU pack as well. You know, from the top, some of them have come off rather quite a bit, right? 25 to 30% even. So after the correction, which are the pockets that are looking ripe for an entry? Would you say defense stands out, or would you look at railway stocks, or even PSU banks for that matter?
both railways and defense are going to play out because if we look at as a country, we have to talk. The entire railway infrastructure is going through a major transition. We are talking of bullet trains right from Ahmedabad to Mumbai. Now that will be extended beyond Ahmedabad, Mumbai. Now they're planning to do it in the entire quadrilateral probably. So that will be something that might be a surprise factor if the government announces that kind of a project. Now we're looking at moving into Vande Bharats, into all the segments and then moving into the overnight journey as well in the Vande Bharats. So that means to say the entire railway infrastructure has to be kind of revamped. So there's going to be a major upside and the order books are going to be quite strong for all these stocks. And the entire sector is going through a re-rating and obviously there is some amount of profit taking in between. So that's the reason we are seeing some kind of the valuation also built up a bit higher. So as the earnings tends to be more and more positive and the order books going more and more stronger there, so you'll see the stocks coming back into kind of rally, and I think that's going to play out a lot. Similarly, the stories with the defense. Defense is more to do with the geopolitical factor, which is going to increase. I'm not going to see any kind of decrease in the geopolitical factors at all. These factors are going to play out much more in the over the next 5 years, and India is going to become even more stronger from a defense perspective, whether being our own preparedness or towards the defense or supplying the defense equipments across the world, we are going to be more and more stronger on that front. So we'll be more competitive as a country in supplying the defense equipments across at least the emerging markets or the Latin American markets. So we'll be a major player in supplying the defense equipments there. So in that way, we'll be more competitive and kind of the order books will be more stronger for the defense equipments. So I think the defense sector is here to stay for long, and obviously the sector is going to see more and more order books. So the third sector will be the energy transition. The entire country is going through energy transition. If you look at this kind of reforms the government is brought in here, the main focus is to cut down on the imports. So we are trying to, on a phase by phase, we are reduce our crude imports by switching into the non-conventional sources like your blending ethanol into your petrol or moving from BS4 to BS6. That has put a brakes on the diesel engines. EV has been a game changer for the entire auto industry, and the sodium batteries are going to make the change in the EV space much more stronger. So people have started investing in the sodium batteries. That's going to be a game changer in the entire EV industry. Green hydrogen to talk about in the future, that's going to replace the diesel or kind of to a large extent the standalone diesel generators which people are using in their offices or home as a backup power. So the green hydrogen will be used there even for the diesel engines on the trains. they'll be replaced with green hydrogen going ahead. So these are some of the applications which the government is working on. It's kind of going to be a far-fetched ones. And these are the sectors we need to watch out where a lot of growth or impetus is coming in from the government side. And the government spending is going to be strong in these space. So the focus is very clear, boost on infrastructure, defense, and as well as energy transition. This is the phase where the entire country is going through. In the next 5 years, we're going to see these sectors play out a lot. And to talk about as part of the energy transition, rooftop solar. So in the budget, we saw 1 lakh houses to be as a taken on a pilot scale to have rooftop solar. That's going to be spread across the country. Over the next 5 years, you're going to see that's going to be mandated across the country so that every household will have rooftop solar on the houses basically. So that's going to be the order of the day. And we're going to see major growth in these spaces rather than looking at the conventional the sectors.
Right, you mentioned EVs, right? But how would you really play the EV theme through the frontline, auto stocks, or would you look at ancillary names?
It again depends on the kind of the sector segment where they're trying to play. Now, if you look at the frontline auto stocks are definitely good, but again the valuation at which you're going to buy these stocks and then what is the upside left on these stocks is what matters. Ancillary space again, it's going to be more competitive there, and how the competition plays out. You need to look at if there's any monopoly businesses there. Need to latch onto that more monopoly business and try to ride the rally in these stocks actually. And battery, the energy storage and the batteries are other thing which the major transition is happening right now. So we need to be watchful on the technology disruption also happening. So how the technology disruption happens and what the new companies are trying to deliver on the newer technology. That's what is something which will be more critical for us. So we need to be very careful in while riding the EV space because the technology disruptions are going to be quite significant. We are talking of graphene to be introduced in the battery space or the energy storage. So the graphene is a very novel technology which people are not even thought of the kind of the facility, the kind of the practical applications what graphene can bring in. It's very early stage of we're talking of graphene as a the commodity which will be used in the battery space. So now that's going to have a far-fetched impact on the kind of size of the batteries, the energy storage capacity, and as well as the kind of the energy density which the batteries can store. The weight of the batteries will also itself will reduce to a large extent. That will improve the efficiency of the vehicles going ahead. So within a small space, you can store more energy density. That's something what graphene can bring to the table. So these are some of the things we need to watch out on the technology front, how these technologies can do a disruption in the entire space. There's a lot of spending happening in this, but it's early days. Over a period of time, you're going to see this technology playing out.
I also want to get your thoughts on how much of an investment, one should make in gold, because, gold is now at record levels, right? Would you say that 20% of portfolio should be in gold, and is this the right time to buy? Is there more upside going forward?
So gold happens to work in tandem with economic cycles to a large extent. If you look at it, I'm talking of the international gold prices. So for the Indian gold prices, yes, the exchange rate, when it weakens, obviously the domestic gold price will continue to rally on that front. It moves in tandem with the exchange rate more. But when it talks about the global gold prices, it works with the dollar and as well as the global real estate, the real interest rate cycle, how the real interest rate moves. So it's nothing but your benchmark yield minus your inflation. If your inflation is going, that means say we are in the negative territory of your real interest rates. That's when gold is going to be outperforming. When the real interest rates are positive and the interest rates are coming down, gold are generally tend to underperform in that phase. So we are going to enter into that phase. So gold might be moving sideways or consolidating in a sideways, or it might underperform on the international gold prices going ahead as the interest rate cycles go down and the interest rates go down. But having said that, when the inflation again starts picking, that's the phase where you need to buy into gold on the international gold side. But having said that, the domestic gold price is a factor of exchange rate. It will always be elevated. It will continue to be positive because the Indian rupee will continue to depreciate against US dollar. We are going to see the impact of the exchange rate coming into the domestic gold price that will generally tend to be positive. So in my view, 10 to 15% should be the minimum allocation one needs to have gold in their portfolios.
All right. Lastly, Deepak, when do you expect the RBI to roll out its first rate cut? Assuming that Fed cuts rates in its June meeting, do you expect RBI to, do the same, or would you say that it will be sometime in the second half of the year?
So the first bank to actually cut the interest rate is Swiss from
That's correct.
the developed markets.
Hmm.
So we are going to see this to follow through by the other larger economies, with Fed and as well as the UK coming through. So I don't see RBI be ahead of that. It might be a surprise if RBI is much ahead of cutting the interest rate also. It can be a surprise factor for the entire country. So surprise factor for the entire equity markets also. But in my view, around in the second half of this calendar is where I've been expecting the rate cuts to come, not before.
All right, that's the view then. With that, Deepak, I would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. It was a pleasure interacting with you, and I look forward to having another chat with you sometime soon.
Yeah, thank you very much.
Thank you. Well, let's go back to Raja then, who's waiting by quite patiently. Raja, before I take up viewer queries, want to get in your thoughts on a Sun Pharma and Cipla. They seem to be doing well in a weak market now. By the way, the Nifty has slipped below that 21,900 mark. A triple-digit cut coming in on the Nifty, and Sensex is also down nearly 450 points. So the sell, the weakness has deepened, so to say. Of course, the culprits, clearly the technology names, top 5 losers on the Nifty are from the IT pack. But Sun Pharma and Cipla, what are the levels you'll be watching out for here for the next couple of sessions?
Yeah, barring the IT space, all the other sectors are actually witnessing some profit booking, but then they are the levels to buy into. And now, even if you take a look at Nifty, it has come into a good dip buy opportunity zone, which I have mentioned. So, if the viewers are trading Nifty, then this would be a good time to buy Nifty. Now, moving on to the Pharma pack, I had mentioned that Pharma is definitely amongst the bullish side, and the stocks continue to show some traction. And when you're talking about Cipla and Sun Pharma, they're definitely showing some positive move to the upside, and I think that both of them are poised to move up. Now, between Cipla and Sun Pharma, I would prefer a Sun Pharma because it has been maintaining its higher levels despite the market movement. It has managed to hold on the higher levels, and it is steadily inching higher, which clearly says that there is a strong bullish possibility which is developing here, and one should consider it to move higher. And the target which I'm expecting in Sun Pharma is around 16,1640, not 16,000, 1640 by next week. So it's a good multi-day play that is getting built up in Sun Pharma.
All right, Tata Group's shares have come under a fair bit of pressure. Of course, ever since there were reports that Tata Sons may not be looking to come out with an IPO, Tata Chemicals particularly has borne the brunt of the sell-off, right? Of course, there is news flow that it has got an IT department order of a penalty worth 100 crore rupees, which of course is going to challenge. But it has recovered from opening lows. It's trading up by 1% or thereabouts now. But off late it has seen a fair bit of selling pressure. Do you see this, weakness as a buying opportunity, or do you think that it will resume its downwards going forward?
See, at the moment, buying has to be very selective because the market is not very conducive to the buying momentum, and the kind of momentum which we are seeing right now, especially in Tata Chemical, it will take a while to appear. And the kind of continued pressure which we are observing, yesterday it was in ban, and today it is trying to recover from lower levels. So all sorts of things are happening in Tata Chemical, and this strong upside we have seen at the start of the month seems to have fizzled out. So those who were expecting and those who are anticipating some opportunities in Tata Chemical should be very careful as this stock has turned largely volatile. So it's best that you look for other opportunities, and I would not be trading Tata Chemical at the moment.
Okay, Tata Chemicals is an avoid at the moment, but let's start taking our viewer queries that are trickling in this morning. The first one is coming in from Abhinav Sharma, and he wants to know your thoughts on a BPCL. Now, the street view on OMCs has been fairly divided, Raja. After a fair bit of 3 or 4 sessions of sell-off, we saw BPCL staging a good comeback. Today, it's extremely flat. Retail fuel price cut, that overhang is out of the way, but crude, of course, is once again above that $85 mark. So here on the charts, what are the signals you're getting? Is it expected to resume up move, or is it expected to remain volatile?
Yes, in the month of Feb, the OMCs were a preferred buying opportunity, and after the slash in the petrol and diesel prices, that's when the descent started. But then the descent which has happened on BPC, on the OMCs, have found a fair bit of support. OMCs continues to be a very good valuation play here. And also in terms of the price action, they are still having a lot of room for upside. So any dip in these names are an opportunity to buy. Now, looking at the OMCs, HP, BP, IOC, HP had the very sharp dip compared to BPCL, and HP has found some decent set of support. So between HPCL and BPCL, I would prefer HPCL because it had reached some oversold status and also found some good supports as well. And that's where it's been seen reviving. Yes, the revival is going to be slow, but then I think that OMCs could be a good play here on the upside.
All right, OMC is a good play on the upside. Abhinav, hope that answers your query. The next query is coming in from Amit Sharma. Wants to know your thoughts on an IIFL Finance. We know that the stock is near about its 52-week low. It has been hammered out of shape, of course, amid regulatory concerns. But, would you say that one has to be really, brave to buy the stock? Or do you think, it is actually a good opportunity to get in?
See, considering we are nearing the election scenario and also the kind of stocks which are going to be in focus, I would not advise you to average at lower levels. Averaging at lower levels is a very dangerous approach, and if you have to really average at lower levels, your view of the long-term picture has to be good. So now, when you take a look at the charts of IIFL Finance, it clearly says that the long term also has been disturbed. So when a disturbed scenario is there, it is better to exit the counter or at least exit 50% of the counter and wait for some revival to exit. So if it revives closer to the region of around 520, which is still quite a bit of levels, one should be very, very careful to exit there. For around 500 to 520 is an exit zone. I would not be a buyer in IIFL Finance.
Okay, that's the view. Not a buyer in IIFL Finance. Hope that answers your query. The next query is coming in from Rupak, and he wants to know whether it's a good time to enter into a DMart. Yesterday there was a upbeat brokerage report. Targets of over 5,000 being predicted. Would you concur with those kind of levels, or would you say that wait for some correction before getting into this stock now, because it's heading towards its 52-week high?
Yeah. So DMart was not in radar for many of us, but then after spending a lot of range bound months, the stock has finally found some feet at around 3,700 levels, and continuous re-rating and also patronage by the brokerage houses has seen the fortunes become better. So I would like to concur with the viewer, and I would like to retain my buying opportunities here. It's given a new fresh weekly move above 44,000 levels. So a target towards 6150 is what I'm expecting in DMart within the next 3 months.
Okay, that's fairly in excess of 6,000. Those are the kind of targets that Raja is foreseeing on this counter. But CG Power, there's a query on this stock as well, and has seen a very good up move. This query is coming in from Abhishek Singh. What are your thoughts? Do you think it's entering overbought zone, or do you think it has more steam left?
Yeah, this stock has definitely more steam left. It's just given a fresh, issued a fresh move couple of days ago around the 480 to 500 zone. That was a catchment area where people were trying to buy it, but they were not succeeding. Now the trends are definitely indicating some further upside, and a target towards 625 can be maintained in CG Power.
All right, target of 625. Take note of that, Abhishek. Next query is coming in from Rohit. He wants to know your thoughts on HDFC Life. He wants to know, I mean, his time horizon is 1 week, and he has, he's trading in the futures and options segment. How should he navigate this?
Yeah, this stock continues to be a slow mover, and the sector itself has been undergoing some overhang, and it will continue to remain. So, I would advise that HDFC Life is not the best stock to be in at the moment. There are better opportunities, and I would like to shift my attention there. And this should be any rally towards maybe around 620 region or 630 region should be used to exit this stock.
All right, that's the view then on HDFC Life. But what are your thoughts on a GMR airport? In the last 1 month, the stock has shed 10%. We have a query coming on this from Vijay. Should one, look at getting in, and if one holds positions, do you think it's time to perhaps sell on rise?
See, the entire real estate pack has been mixed. So I would not be a buyer or a seller at the moment. Better to go with some leaders like maybe DLF or Oberoi Realty for some upside rather than concentrate on GMR. Yes, it is an actively traded counter, but then it moves on very limited days. So that's why I'm making this statement.
All right. Last query really for the day. Mohan Prashant wants to know, I know we've discussed IT pack, in details, but this gentleman wants to know your thoughts on KPIT and whether or not it warrants entry, given the, as it has corrected quite a bit. Or, he wants to know whether he should wait for more downside before getting in.
Yeah, so yes, the IT pack is witnessing a decline. KPIT, it was having some preferred moves, but then the state of decline is clearly indicating that yes, there could be more pressure to the downside. So it would be best that one exits from this counter and does not look to average it at these current levels.
All right, that's the view then. Hope that answers your query. With that, we've come to the end of the query segment, and want to thank Raja for taking out time and joining in and sharing his thoughts with us. Raja, thanks a lot. Have a great weekend.
Yeah.
It's an extended one.
Same to
Wish
you.
you a very happy Holi as well.
Yeah,
And
happy
of course,
Holi to you as well, and
thank you.
and your team.
Thank you. Thanks a lot. But, before I end the show, for all you cricket lovers, the Indian Premier League goes underway today with Virat Kohli's RCB, in fact, playing Chennai Super Kings. Of course, 8 p.m. is when the match starts. Dhoni will return to action in what could possibly be his last season in the tournament. Of course, we are gearing up for that. It's a long weekend and plenty to watch out for in that sense. Well, with that completely timed out on this edition of Opening Bell, from me and the entire team, thanks a lot for tuning in. Wish you a very happy long weekend and a happy Holi to all our viewers as well. But for all your other news and updates, don't forget to stay tuned to Money Control.